Hey everybody, it's Seth, Paul, and Mo for Everything Money. We're glad you joined us again. Paul, we do so many videos, it's hard to keep up. We've talked about Quest Diagnostics in the past. One of our dear patrons, Arthur, requested this last live stream. Our live streams are on Tuesdays at 1 p.m. Eastern, and he donated some money to have this discussed, and here we are. We didn't get to it on the live stream, so here we are. Quest Diagnostics is an American clinical laboratory. Mo, you might be the specialist on one of these. It's a Fortune 500 company, operates in the United States, Puerto Rico, Mexico, and Brazil. Contains collaborative agreements with various hospitals and clinics around the globe. Paul, I introduce you to Paul, Gabriel, and Mo. Welcome, Paul and Mo. Let's talk about Quest Diagnostics. This is a very...
Could you say Brazil again?
Brazil. Barcelona. People love this. I don't know why.
Well, but, I think the biggest. I think they're the biggest in the country, if not the world. Everybody goes through Quest. There's two. So there's
so I did life
ones.
Insurance once before. I think I went through, or twice before. I think I did Quest Diagnostics.
So I was talking to Shelly about it, and when we were talking about where COVID tests were going through, and it was always Quest. It was Quest and one other company. They're the go-to.
Mo,
not only for COVID, but for everything.
Mo and Paul, both of their fathers are physicians, and so they have a little bit of medical fields in their minds. And so, Paul, let's talk about Quest.
Basically, doctors.
That's what I was going to say. I mean, pretty much.
Mo actually went through 2 years of med school before he dropped out.
Yep.
So one thing I want to make note before we go further, I'm willing to bet that they have very big numbers in the last year. So for everybody looking at this, just like when a company had a bad year last year because of COVID, you have to discount that and say, listen, it's a fluke year. I think the same goes with a big year like this. Now, are we going to change the way in which we look at and do, blood test? Yeah, probably. But are they going to have as big a year as they did that last year, which is my guess? I don't think that's going to happen. So let's make sure we keep that in consideration when we're going forward.
Okay, well, let's get into it. We will look at Quest Diagnostics. We're going to look at obviously the ticker symbol and the stock price, and we want to see if the fundamentals behind the company support this price. It looks really high, Paul. And
from a nominal point of view, yes. But from a valuation metric.
Let's see.
So $18 billion market cap, essentially. So here's the deal, Seth. PE, 9.8.
I like
Massive
that.
check. Profit margin, 17.5%. Massive check. With a good gross margin. What's the difference? Gross is every unit sold. They make 40% to the bottom line. Profit margin is after all overhead, all expenses, etc. They have a nice little dividend of 1.7%. So it's $300 million, okay? They pay every year. Their last year's free cash flow was $2 billion. So they have plenty of money to pay that dividend, which, as everybody who's been watching us for a while knows, your dividend isn't always secure. You want to make sure that the free cash flow can support it. And in this situation, it easily can.
In this market, Paul, it's nice to see. It's rather surprising to see a company that has a low PE like this. So I'm excited to see.
And again, I think it's because of the fluke year they had last year.
Yeah. Okay, let's keep going. Revenue growth over the past 5 years is our pillar number 3.
I guarantee this is a check. 7.2 to 10.3.
Oh, boy.
And look, Seth, 7.2, 7.5, 7.5, 7.7, 10.3.
Huge year last year.
Yeah, huge jump from last year. But it wasn't, they were very consistent over the previous 9 years. So it wasn't a massively growing company. So I think this is part of the story. You have to remember, like, okay, well, is this going to be sustainable? Is this the new plateau? Like, did they go like this and then this will be like this? Or will it be more like this? Who knows? Still a great growth from before. That's the question you have to ask yourself. A value investor would be the person who sits there and goes, hang on a second, let's see. And this is part of your due diligence. Let's see how their sales are doing in future quarters. Okay.
How is the profit over the past 5 years going? I'm sure it's rather...
706 million to 1.8 billion.
Oh, wow.
So check mark there. And again, 706, 785, 723, 793, etc.
Mo, why did they have such a big year last year?
This little thing called coronavirus.
No, I mean, what do they do? I didn't even know.
All the testing went through them. Any kind of testing, blood tests, COVID tests, anything was sent through them.
Got it, Paul. So your dad's hospital, you're saying that
my dad's clinic.
They were big on COVID testing.
I see, got it.
Yeah, I get COVID tests from my father all the time.
I saw your dad speak about how COVID was going through the Amish community because they're very close in the Amish community. Did you know that?
Oh, I did not know.
Oh, yeah.
It's bad down there.
Is it really?
Mo, you were at that talk too because, you know, they obviously don't have access. I mean, you know, it was running rampant through them last year and your dad was all over it. So keep going, Paul. How about shares outstanding, pillar number 5?
The shares outstanding, slightly lower, 137 to 133, check mark. Slow and steady, buying down the shares. over the last 10 years. So good, not
This is
huge.
nice. Yeah, this is good.
But remember, we want to make sure that they're, especially at a low valuation like this, buy back shares, etc.
How about current assets over current liabilities, which is pillar number 6, Paul?
Current assets are $3 billion. Current liabilities are 1.7.
Nice.
Excellent. Check mark there.
We're humming now. How about free cash flow? We know, well, we've seen the free cash flow. You see it here, and they have a dividend to pay. Let's look at it over the past 5 years.
Now remember, this software here is available to everybody who's a patron. And the reason I like to show it is I make modifications to the software to make it easier for patrons to understand things. For example, free cash flow. This is a line I add to the cash flow statement in the investing section. Free cash flow is cash from operations, less capital expenditures. But normally you wouldn't see this line. To make it easy for you guys, I added this line, 871 to 2 billion, check mark there. And the average of the last 5 years is 1.1 billion. So I'd probably discount this to 1 billion times 20 is $20 billion. And that's a check because it's currently 17.7 billion. So again, guys, if you look at this software, I go up here, we go to the 8 pillars tab. It's all 8 check marks here. This is an 8 pillar stock. And you can just skip steps, get the software, 80 cents a day. You get access to all of this. Stock Analyzer tool, news. This will be your go-to for all financial issues. 80 cents per day. This is a no-brainer if you're serious about investing and learning. This is it.
Paul's talking about our Patreon. The link is in the description below if you want to join our community. It keeps growing every single month, Paul. Astoundingly, over 3,500 people. And you can get this software right now if you sign up for our Patreon. Paul, this is awesome. 8 pillar stocks are awesome. These numbers are awesome. What are your... Should we go to Stock Analyzer? What do you want to pay for this?
So let's go to Mo on the trading while I load my data for the Stock Analyzer tool, and then we'll figure that out.
We're heading over to Trader Mo. He is the host and well-known Egyptian dreamboat of our Bidnast Nation. And if you're more interested in a little more savvy, fast-moving trades, you can join Mo in that Bidnast. What are people doing with DGX over there with trading Mo? What are people up to?
So this is interesting. Look at where it went with COVID, obviously down here, and it came back, and it kind of just went back to where it was prior to COVID, and it's been stable, growing. I mean, it had a little bit of a bump, but that gives me confidence to say this thing is not crazy volatile and whatnot. And if you look today, it has entered the sweet spot today, first day.
This looks phenomenal. Look at the red over the yellow here. Nate, you can show them over here. Red over the yellow down here.
Exactly.
We're waiting for an engulfing candlestick right here. Are we over the moving? Yes. Are we over the averages?
Let's see. Let's take a look. I like that you have that over there. Let's see here. Yeah, we're over all 4 of our major moving averages, which is great. Love it. Pretty consistent volume if you just look across. Yeah, this is looking really good.
Right.
This is something that I definitely want to keep an eye on for a trade. And remember, if we do trade this, we need to have three green candlesticks. So one, we want tomorrow. Let's see if we can get that on Wednesday. Moving up, you're probably going to face resistance up here on this 140 area, but this is a good looking stock. I like this one.
If you're at home thinking this is nonsense, I don't know what this means, but I'm interested. If you join the Bidnast Nation, Mo just basically puts out a video every day, like 1 o'clock or something, and says, folks, it's time to buy Quest today. Our team of traders in our Discord chat, they all get together and they say today is the day. And then so basically Mo can inform you. And if you trust this system, which you'll learn to trust over the next few weeks, and watching our Employed Trader series that I'm getting into now, is then Mo will tell us when to sell. So if you're too busy and you don't have time for this, but it intrigues you, you can join our Patreon and get in on the action, right, Mo?
Exactly.
Paul, you have the Stock Analyzer tool. Now, listen, we've gotten a lot of feedback. This is a monumental tool we're offering to our patrons in our software. However, it's slightly confusing, so we need make sure you explain this in depth over there, my friend.
Okay, so this tool here is used to sit there and say, okay, what assumptions do you have? It asks you for 3 levels of assumptions, low, middle, and high. Now, usually you have the low one being a lower number and the high one being a higher number. Makes sense, except for 2 areas. One, share change.
We want that going down.
And desired annual return. And the reason being is the more they're buying back shares, the better it is. So to be conservative, you put a number closer to 0 in the low number and higher and they further away from 0 in the high number. For return, the higher your return, the lower your price. So when you're trying to be conservative on your price, you need to put a high return in there. For example, if you knew an investment was going to be worth $50 in 10 years, paying $5 for it today versus $20, which one's a higher return?
You
paying $5.
Yes, absolutely.
So the higher the return, the lower the price. So these are the only 2 areas in which you go low. I mean, you have to put some sort of, word in here that explains that. Now, here's the issue with Quest, putting it in the system. Stock Analyzer tool is really, really good for companies that don't have some fluke year that just occurred.
Yeah.
They just had a fluke year. The question you have to ask yourself, is this revenue going to be consistent? Okay, because they were always in the consistent mid $7 billion range of revenue last 8 or 9 years. All of a sudden, they jumped to 10 billion. So I put in the low end, actually losing 2% a year for the next 5 years in revenue. I have them staying the same for the next 5 years, and I have them growing at 2% for the next 5 years. Okay,
That's not much of a growth there.
no, it's not. But if you looked at their previous revenue, they weren't growing at all either, right?
Revenue. Yep, you're right. No, actually, Paul, all the way back to 2012. I mean, not much.
It's pretty much the
growth at
same
all.
number, right?
Yeah.
Right, and I'm okay with that. I always tell people, what matters is when you buy a company is, are you paying the right price? Whether there's growth or no growth, are you paying the right price for that growth level, right? That's what matters the most. If there's a lot of growth, you should be willing to pay more. If there's not a lot of growth, you should pay less because you don't have that upside potential. That's fine, something to understand. Share change, I went again, we have to go negative 0.5% share change to negative 1.5. Obviously, this is a very big number, so we put that in the high level.
So best case scenario, they're buying back 1.5 shares per year.
Correct. Worst case scenario, I think they've pretty much shown they're going to buy back 0.5%. Profit margin, look at the last 1 year versus the last 10 years. Big difference. So I went back and said, I'm going to ignore this 1 year profit margin and say, let's go 10, 11, 12%. Same with free cash flow as a percentage of revenue. I look at the 1, 5, and 10 year numbers, and they're drastically lower from the 10 year numbers, drastically lower than the 1 year number. So again, I'm putting 11, 12, 13. PE, this PE is skewed low because of the year they had. So again, I'm putting 15, 17, 19. Price to free cash flow, 12, 15, 19. Desired return, I pretty much always do 15, 12 and a half, and 10. I hit the good old analyze button. They're currently selling at 133. According to this, low end, we have about mid 70s, high end, 170, right? So at 133, if all these assumptions prove to be true on the high end, you're going to get a good deal here. If your assumptions are on the low end, you have to pay 75 to 80 bucks for it in order to make that happen. That's what this is doing. The stock analyzer tool can do one of two things for you. It can tell you pay this price, or the way I use it is a gauge of saying, you know what, if the only numbers that are in the realm of my metrics are the high numbers, this is probably an overpriced stock.
Yeah, prior to COVID, this stock traded at $100, $111. Then COVID hit, it went down to, good Lord, $76, $73.
And that would have been a huge gain.
Yeah, and now it's obviously at an very close to one of its all-time highs. So
people might be sitting there going, wait a second, it has all 8 pillars. Why wouldn't I buy it here? Remember, guys, that's what we inputted the stock analyzer tool for. The 8 pillars tells you a story, and you use those 8 pillars to then make assumptions in the future and to get more answers to questions you may have. So according to this, now let's go change things. Let's say we think the company will never go lower than today in terms of revenue. And people are going to be very serious about Quest Diagnostics. Because what could have happened, guys, is people use Quest and they go, you know what, I like Quest a lot. I'm going to use it for other things. Like I said earlier, when I had insurance tests to take, I went to Quest. Very easy, boom, 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 done.
And
very
they're
simple.
everywhere. They're
everywhere. So I can sit there and assume that. I can make all these assumptions. Let's say their profit margin, I'm going to assume they go from 12, 14, 16%. Free cash flow as a percentage, again, 12, 13, 14%. PE, I'll keep those all the same. And all of a sudden now, guys, I changed my assumptions a little bit.
great deal.
And all of a sudden, I think it's a good buy right here. If you believe that Quest Diagnostics is not going to lose revenue from here, that this is a new level of plateau, this is a good buy right now. You will be making 12.5% return on your money, if not higher, based on these assumptions.
So we've slammed people before, Paul, when they say, I believe Tesla's going to do this and I believe NIO is going to do that. How do you translate belief into fact?
So I look at the history. When I look at Tesla and the assumptions they're making about Tesla and NIO, I sit there and say, well, where are these assumptions within a realm of possibility? Is it possible that Tesla becomes the biggest car maker in the world in 10 years and justifies a 5,000 price, and they stop buying back, they stop issuing more shares,
yes.
And they sell at a huge multiple? Well, is it possible? Of course. Is it probable? No. Your job as an investor is to look at 10,000 stocks out there and find the probable situations that make the 20 or 30 highly likely situations that make your investments good. Is it probable? Is it more likely that their revenue stays the same than Tesla's going up, 30% a year for the next 10 years? Yes, this is much more likely. And that's our goal here. You know what I mean? If I said to you, Quest Diagnostics are going to keep its revenue same for the next 10 years, you'd be like, well, that seems very reasonable. Maybe it does. I look at it saying it's only reasonable if all of a sudden people shifted to using Quest for other things.
Right.
Right? And that's fine. Everything in investing is the present value of all future cash flows. It's paying as little as possible for that present value. That's all it is. If we had a crystal ball and we saw Tesla's future and we knew exactly what their revenues and profits are going to be, we could come up to exactly the number we should pay for the company to make whatever return we desire to make, right? Same thing here. We're looking at Quest and saying, wait, before last year, their revenue was the same. Before last year, the profit was the same pretty much all the time. Doesn't mean it's a bad company just because in fact, it's quite the opposite. Usually it's a good opportunity because people would look at that saying, what a boring company. I don't want to own that. I look at it and say, okay, it's boring. Nobody wants to own it. The price is lower. That's why I want to buy it. Does that make sense?
Yeah. All right, folks, that's our take on Quest Diagnostics. If you're interested in the software and you're drawn to this math, you can become a patron member and have it right now, and we'll welcome you into our community. Mo, we're going to be trading this puppy here coming up. Let's get some
I think so.
engulfing
I think
candles
so. This is
and get
looking
after
great.
it. All right, fondle the thumbs up on the way out. Appreciate you guys watching, and thanks for the support. We love you.